Hello, everyone. Welcome to Note Buying Cash Machine. My name is Ahmed Hazel, and this is your blueprint to banknote riches. I am pleased to have you on this webinar, and I look forward to sharing some information with you just about the non-performing banknote space. This is a really exciting time for us in the marketplace. So let's get started. Let me share some information with you. So you can find us over at notebuyersedu.com, www.notebuyersedu.com. So what you're about to discover is how to invest in banknotes, mortgage notes, mortgage-backed securities, backed by real estate. So you can make money just like the banks and put more cash in your pockets without ever having to leave home. This is the real way to invest in real estate and move from the self-employed quadrant to the true investor quadrant. And I'll explain that as we go along. After the mortgage 2008 meltdown, banks have been hurting really, really bad. And they took a big hit with the mortgage meltdown. And what they discovered is that there are homes and people at the end of these mortgages. So they understood after a while that it just wasn't some type of bond or something that they were shorting, but that there were people at the end that had families and homes and lives and lifestyles that was being affected by this. The banks have billions of dollars in bad debt still, and they've been accumulating more bad debt, and it's not going away. And they need this bad debt off their books, and their foundation is literally cracking from under them. So it's important that more people are in this space, know the space, learn the space, so that we can continue to buy this debt, get access to real estate easy, and rebuild our country. Remember, our objective is to get access to real estate or cash flow. The bank is trying to stay away from real estate. We're trying to acquire real estate. So this is our primary objective, is to get real estate or cash flow. And once we have that real estate, we can easily liquidate it into the open market for people to rehab and put renters in and so forth. One of the things that early on that I understood about being in this business is that I had to begin to think outside of the box. And thinking outside of the box meant not thinking traditionally, not thinking like the mass majority of people thought. I had to do something different, because the way that the mass majority of people was thinking was getting them the same results over and over again. So I had to do something different and think differently and decide, how can I enter the space and stay in the real estate investment space and not deal with all of the headaches. And investing in non-performing notes was the way that I discovered that. And what I found out was that the trick that's been played on us is that we're taught that the house is the thing that has value. And the house does have some value, but the house tends to fluctuate with the current market, whereas the mortgage note is a legal document. The mortgage or note is a legal document that does not fluctuate with the market. It stays consistent with what's written on the mortgage note. One thing about notes is that we all have them. We all have them and carry them around every day. So each dollar that you have in your pocket is a note, and that note is a promise to pay. So when we look at mortgage notes, a mortgage note is short for a promissory note, and that is a promise to pay as well. But you can see here with your currency, that is a promise to pay. Most of us, though, are looking for the pot of gold at the end of the rainbow. And I think that from being in the space for 10 years, that this pot of gold is it. This note space is the pot of gold. This is the space where you actually get to do it virtually and make your transactions virtually, and it's all so beneficial and so really easy to do. Now you have to work hard at it. This isn't a get rich quick thing overnight. You have to work hard at it, and 90% of the work is going to be done on yourself. 90% of the work is going to be based on how you are changing your thought process and how you are looking at things differently. One of the things that I just shared with you is that I said the mass majority of people, they're going one way, and I had to decide to go a different way. Let's see who this is. So they were going one way, and I had to decide to go a different way. All right, let me unplug this so it doesn't disturb us any longer. I think that might do it. I have several of them though. So the mass majority of people are going in one direction, and I had to make a mind shift and say I was going to do something different. So in doing something different, that took me out of the mindset of the mass majority and put me on my own path, which has been such a benefit. So let's talk about what actually a note is. So again, a note is a promise to pay. And one of the things that got us into the mortgage meltdown is this document right here. This is the start of it right here. This adjustable rate note. This adjustable rate note is what got the majority of the country into a problem. Now, the one thing is that since 2008, they have actually moved to something called a light doc loan, which is simply another way of saying an adjustable rate note. They're doing them again. All right. So we have to be very careful and pay attention to what that means and where we're headed again. But this is a note, and a note is just a promise to pay back a debt. But there are notes on everything: luxury cars, sports cars, luxury homes, vacation homes, boats and yachts, airplanes, submersible vehicles, recreational vehicles. There are notes on everything. You have here a note on a small private island, and there's just notes on shopping centers. These are pretty I don't want to say they're common, but this is kind of like the cream, what everyone is really looking to get access to, a commercial shopping center. You have single family residences that have these notes, and this particular one was one here in Reisterstown, Maryland. I think we bought this one for at a great price. You also have these that are row homes in every urban area. This was in Baltimore City, and these come at great prices. You can buy these and then sell them to real estate investors all day, every day. You also have apartment buildings. These are kind of like the shopping centers. Everyone wants to get their hands on these as well. So you have to look at, we're going to take a look at the 7 reasons mortgage notes are the investment you have to have in your portfolio, and that they're hassle-free and worry-free. So notes are a great investment, and that mortgage notes are secured against the property. All right, so we have to understand that the mortgage note is leveraged against the property. Holding the note makes you the bank without the headache. So you get to collect the payments on the real estate without having to worry about termites, tenants, and all that other stuff. So it makes you the bank. So again, no toilets, no tenants, no termites or trash to deal with. It's all upside for you. And it's a hands-off investment and can be managed virtually. So you don't have to be running to the property and everything like that. You just get your payments, and if there's a late payment or something like that, you just deal with it. The investments are scalable. So you can do the row home that I just showed you in the urban area, or you can scale up to the commercial shopping center. It's all in what you have an appetite for. These notes can be purchased at really great prices and really deep discounts. So it's a totally great investment, because remember, you're buying the paper first, meaning the note. You are not buying the property first. You are buying the paper. There's a distinct advantage in doing it that way. So, strategies that secure our investment. Let's go over some. So, you can buy the note and hold it to its full term. So, let's say you have a $150,000 mortgage note. Do you understand that that note will pay out to $359,262 over 30 years? That's a little more than double the initial investment. All right. You can resell the paper. Reselling the paper is, okay, so you buy a note and it is a marketable asset. It can be sold over and over again without the headache or delays of the property changing hands. All right, so we don't have to go down to the property level. We're just moving the paper around. You can reclaim the real estate. If the note is non-performing, meaning that the homeowner is not paying on it, then an offer can be made to the property owner to deed the property back to you, the note holder. So we call this the deed in lieu strategy. So the homeowner is contacted. The homeowner says they no longer want to be in the property, and then that homeowner signs a simple sheet of paper, and the property goes right back to the note holder, and that homeowner can move on and do something else with their life. You can offer a short payoff. A short payoff is offering the owner of a property a short sale option or short payoff, and that can increase returns tremendously. It also puts capital back in your pockets faster than waiting for the full term of the note. So here's what happens. The homeowner, so if we take a note, the homeowner owes us $100,000, but I paid $25,000 for the note from the bank. The homeowner comes and offers me $50,000. I accept, because I'll give them a $50,000 break on their mortgage, because remember they owe $100, but I only paid $25, and I'm going to make my $25 back plus another $25. That's a win for everyone. I can restructure the note as well. So the current terms of the note may be a strain for the property owner. Modifying the loan amount may increase your returns and keep the property owner making payments. So what we do is we look at the loan, and the owner says, I can't make $1,000 a month payment. I say, okay, great. Can you make $500 a month payment? The homeowner says yes, and we restructure it so that the homeowner is making more payments, lower payments. But if we tweak the interest rate just a little, sometimes that could add on thousands of dollars to the loan. But we want to make it fair. So we have to really look at it and structure it to where it's totally fair for the homeowner and totally fair for us as the investors. Getting cashed out. One of my favorites. I love to get cashed out. If the owner is creditworthy, you can suggest a refinance and make it attractive, offer a discount on a note. So if the homeowner has the right credit, and sometimes we have to help the homeowner get to being creditworthy, meaning putting them in some type of credit repair or some credit repair program or something like that. And then we can take that loan and offer it to another financial institution. And a lot of times they'll say to us, if you reduce the amount that they owe, we can restructure the loan and refinance you out. Wow, this is an advanced strategy, one of my advanced strategies. So we call this liquidating chunks. Or sometimes we'll say selling a partial. So once a loan is performing, selling chunks of the payments is always an option. You get to retain ownership of the note and make capital gains. So here's what that looks like. Let's say, for an instance, my homeowner is making $1,000 a month payments to me. What I do is I simply take those payments. Let's say I have, so they're going to make $1,000 a month payments to me over the course of 30 years. Now I take those $1,000 a month payments and I want to, let's say, get myself, let's say I need $10,000. So what I can do is say, I'm going to give a 10% return. So on $1,000, on $10,000, I'll give someone $1,000. So what that means is the person takes 10 payments and I sell them to them, and then they get to keep 11 payments. So I'll call up my servicing company and say, direct these payments to XYZ buyer. And then that buyer gets 11 payments, but they give me $10,000. All right. Now I can claim ownership. Claiming ownership is when a property owner refuses to pay, we simply foreclose and take the property back. It can be listed on the open market, or you could allow someone to finance it through you. So once I have the property back, I can either put it on the MLS with a realtor, or I could do some type of seller carryback. So this is all upside for the note investor. It's a win-win. So let's see what one of the richest men on the planet has to say about buying mortgage notes. Okay, let's see.
Mortgage-related securities or mortgages themselves, at current market prices, they're going to make money over time because the United States government has staying power and it has a low cost of borrowing. And if I could take 1% of that $700 billion pot and take the gain or loss from it and be their partner, and they would buy the stuff at market, I'd make a lot of money. Yeah. No, you have hedge funds and people like that buying these assets to yield 15 or 20%. That's the buyer for these people that are trying to unload them. The U.S. Treasury has got borrowing costs like nobody else has. They can borrow basically unlimited amounts. They can stay there for years and years. These assets will be worth more money over time. So when Merrill Lynch sells a bunch of mortgage-related assets at 22 cents on the dollar, like they did a month or so ago, the buyer of those is going to make money, and he's going to make a lot more money if it happens to be an institution like the U.S. government, which has very, very cheap borrowing costs.
So you are saying to those taxpayers who are worried about what's going to happen to $700 billion, chances are good that when these securities are purchased and sold, you'll get a lot of your money back.
I think you'll
or
get
all of your money back, and maybe something else.
I would bet on it. If I got a chance to take 1% of the deal, either way, I would make that bet.
Okay, you heard what he said. He said if he got a chance to take 1% of the deal, he would take that bet. All right, so there's more than $700 billion in inventory, and it's actually increasing as we speak. So this is why you hear so much talk of a crash coming, because people in the financial world understand now that the banks are incurring more and more debt. So let's look at how we exit one of these deals. Just an example. So we purchased a note from a bank for $2,832. It was a first position note, and it has an unpaid principal balance of $160,000. So look at that right there. I mean, if that doesn't have you jumping out of your seat, I don't know what would. If you don't understand that we bought the note from the bank for $2,800, but the homeowner owed us $160,000. That is, and I mean, those returns are totally awesome. And the value of the property, though, was $35,000. So we called the owner and asked him to sign a deed over to us. Okay, this is our deed and lieu strategy, and it cost us $300. So the property was vacant. So we bought the deal and sold the property to a cash buyer for $19,500. And the cash over and above our investment was $16,368. Now here's what's unique about this deal and about this business. Here's the investment. And it is I didn't find this out until afterwards, and I actually sold this property to a friend of mine. It's a 2 to 4 family multi-unit building. I didn't know it. It wasn't until I sold it to my friend that I realized that it was a multi-family, and I think he sold it and got way more than what he paid for it. So these are just some of the types of deals that you come across on average. So the way it looks is that the bank sends me an email with a list of deals nationwide, and I simply become the bank. I simply pick and choose what I want to buy and what I want to spend my money on. And those properties look just like this. They look like cash to me. So I use different strategies. I use different resources that I'll be talking to you about in a moment. I use different resources to actually make money off of the deals. I don't need to hold these deals and have them in my portfolio. I just need to cash out on them so I can turn the money and make more money. Remember, I just turned $2,800 into a $16,000 profit. Now with this, the way that I started thinking out of the box is, remember how I was telling you how everyone else was running? And I decided to take a shortcut. I decided to think out of the box and say, why run that long way when I can simply just take a quick shortcut and get to the head of the line? So let me ask you a question. After seeing this information, after understanding what I'm showing to you and the opportunity, what would something like this be worth to you to learn how to do, to learn how to make money in this industry using this little known strategy of investing in mortgage notes? And sometimes you'll see people passing around tapes and things like that, but a lot of them don't really know the strategies for making money in this industry. So would it be worth to you learning my note buy and crush it system? And before, I was only releasing it as a private system, but the total value of my complete system was $10,000. All right, that's what I sold the system for, and I only sold it to select clients. My advanced exit strategies. Remember how I was telling you that one of the deals that I did was selling chunks of payments, where I was selling the $10,000, selling 10 payments for $10,000, but I was giving the person $11,000. The benefit for me is that I get $10,000 right now, but my investor has to wait 10 months to get their total investment back. So in that 10-month period, I can take that one $10,000 and turn it several times over and over and over again so that I increase my revenue. So by the time it takes me to by the time I'm paying back the $1,000 extra to the investor, I've already taken his $10,000 and turned it 3 or 4 times. So that is the one of the advanced exit strategies, and we've sold this system for $2,500. So that value looks like to you today $12,500. I think that's a good value, but we're adding something else. We're adding in our BPO strategy guide. And these are the sneaky tactics that we use to evaluate houses, just like the banks. And we take these tactics, and there are so many of them that it's like I can't really tell you how we use this to make so much money. But once you hear just one of the strategies, you'll understand that this is like amazing how we use this. And one of the things that I did was on the multifamily, I overlooked the fact that it was a multifamily and just sold it to my investor friend as a single unit. So that was one of the things that we figured out right away, that, wait a minute, the BPO says it's a multifamily. So that's one that I just gave you. We look to see what's the property type on the BPO to ensure that we are maximizing our returns. And we've sold this system for $297. So that's a $800 value for you today. And I can't understand why someone wouldn't take me up on this deal. But bringing someone into the business, what I understood and began to see was that they didn't have the contacts that I had. They didn't know the service providers to reach out to. They didn't know the direct people that were in the space doing good business. So what I'm throwing in is a $4,600 value is my private Rolodex. This is where I put you directly in contact with the people that are doing the things that you need to do and providing the services that you need. So that's a $17,388 value when I add in the BPO strategy guide and the private Rolodex. One of the things that I also wanted to include was what we call our foreclosure explosion guide. Now, what that is the foreclosure explosion guide is giving you a list of the different states and their foreclosure laws. So when you're looking at a deal, and let's say the deal is in Minnesota, you can quickly look through the foreclosure explosion guide and see what the laws are and timeframes are in Minnesota, and decide whether you want to buy that deal or not. That's a $497 guide that we sell. And we also have our foreclosure attorney list. So you can look through the foreclosure explosion guide and then decide, yes, I want to move forward, and then look through the foreclosure attorney directory and find an attorney in that state, and then call them right up and say, I'm looking to do a foreclosure on this property. Can you help me? That's a $197 value. So your total is, again, with the no buying crusher system, advanced exit strategies, BPO strategy guide, private Rolodex, foreclosure explosion guide, and the foreclosure attorney list, $18,000 value. Wow, excellent value. But wait, there's more. So I also have the members note support forum, and this is a $297 deal where we allow you to visit the forums. And I just love forums because I can click through the forums. I can read what other people are saying. I can meet other note investors. I can talk to them about deals that's coming up. I can engage them and find out what services that they're using. I can talk to them about which banks they're buying notes from. It's such an amazing tool that you can use to get deals done. I built a lot of personal relationships from the forum. So your total value, including the members note support form, is $18,379. But wait, there's more. I'm also giving you the A to Z wholesale note blueprint. And this is the blueprint that takes you from setting up an LLC to setting up a bank account to getting vetted by sellers and on and on and on, all the way through to doing a deal and mailing the documents out to your buyer with none of your cash or credit. And we call this the note arbitrage. All right, this is the note arbitrage. Now, in certain aspects, you may hear someone say it's wholesaling, right? But as you begin to get more sophisticated and deal with more banks and financial lenders and things of that nature, you'll hear the word arbitrage a lot. And that's what we basically call a system. It's the note arbitrage. This is how we make cash without investing or risking any of our own cash. So including everything with the A to Z wholesale note blueprint system, that's a $19,376 value. And, you know, I can't imagine why someone wouldn't take advantage of this at this price. But wait, there's more. So we're doing special bonus monthly training calls where you can get your questions answered and figure out how to put all this together. Sometimes you can have all the tools but not know how to put them together. All right. And this is a $747 a year program where we're just answering questions live and getting deals done, helping you get your deals done. So with the bonus training calls, you're getting $20,123 in total product value. All right. And this is what that looks like. All right. This is this is the complete system. And all of this can be yours for the amazing price of only $997. All right. This is your opportunity to get started for such a low cost. All right. This is years and years and years of mistakes that I have made and overcome. And this is what you can get for just a fraction of not only the total cost, but a lifetime of work that I have put into this. And you can head on over to notebuyersedu.com to get started on this system. Such an amazing system. Get started on it now and don't wait and don't hesitate, because this is something that I'm not going to keep up for a long time. I want people to take advantage of it and really learn the system. All right. So this is $997, and it's a total value for you. And it's just, when I think about it, I'm just like, wow, I'm giving away so much for just $997. But I want you to get started on this, and I want you to learn this business of non-performing notes. And I've compiled all the tools for you, and I'm adding more consistently on a monthly basis. So get on over to www.notebuyersedu right now and get started. And I look to seeing you on the other side. Thank you for your time, listening to this information and having this conversation with me around this. Be well. Keep the faith.